So at the service revenue, we said that we're just widening the lower end of the range to reflect realistically where we are today. We're 2.3. But as we compete, for sure we're pushing towards. And on the margin side, what we're basically saying is that we're going to put a bit more investment into kind of on the distribution end. So for example, and we've already done this, we've changed ongoing commission, the so-called OGR. Our OGR levels are lower than Vodacom and Telkom, okay? So we said to Charles, please go ahead, just look at OGR in terms of the distribution. You all understand how the distribution structures work in South Africa, so we're the lowest OGR. So if somebody else is offering you a higher OGR as you're a dealer, and MTN is number 3, that can't keep us competitive, even though we're trying to protect margins. So we're pushing, we're investing a bit more at the dealer and at the distribution end in South Africa. I think you'll start to see that come through. So the lower end of the range is saying we are showing reality. Because if I said to you, Louise, we're doing 4 to 6, I haven't showed that today, have I? Okay, so let's just lower that range, but the top remains. So let us see how these costs of sales investments improve our market shares, yes or no. So we're still aspiring for healthy market share. We still aspire for 30 to 35% of all net additions in the market. That aspiration has not changed. We're just wanting to be realistic around the competitive dynamics that we're seeing. So there's a lot of work around, let's say, distribution, around devices. The device strategy is quite granular. We have device partners who are bringing devices and attaching the SIM, and we don't have the cost of that, but we're also investing in devices. So our aspirations remain around maintaining or actually growing market share, other than not the other way around, to be clear. Network as a service, my discussion with Charles, and this discussion will now move from Charles to Ferdy and Yolanda, is I think we have to think about the dynamics of an SA market in terms of MVNOs. South Africa right now, if you think about it strategically and just step back, there are 2 fully invested networks in MTN and Vodacom, 2 fully invested networks, okay? High quality and all of that. Telkom, with respect, have portion of their network, and then they roam a little bit on us and on Vodacom, okay? And then you have these MVNOs are coming on, the banks, etc. So I'm not disappointed that we're missing that target, because actually, if we don't think about it strategically long term, you're putting all this capex and you're having all these MVNOs a bit like OTTs. They don't put the capex in, but they can go and give you much cheaper data than you yourself, the generator of that data, who's got the cost of production, can. So I'm very happy to miss that, because ultimately you could find yourself where Europe found itself. Go and look at the Netherlands, okay? You look at the Netherlands, 10, 15 years ago, the MVNOs wrecked the market on retail pricing. So Charles missing that, that's okay. You can mark me as red, but strategically, if we're not thinking about it. So we will go and look for the retail business, but we have a walkaway point where the pricing does not have sufficient headroom at the cost of production. We say, hey, Charles, just leave it, okay? We're not going to, that strategically, you need to understand that's how we're thinking about it. Because if you're not careful, you'll have a Netherlands effect. Jens, our former colleague, saw that happen live when he was in Vodafone Europe. So, look, we'll push on FWA. We have spectrum, as long as we have sufficient spectrum and we can, get the quality almost fiber-like to a home, we'll do that. We're looking at the outdoor units, how they can help us with spectral efficiency. That will invest to the extent that, unlike Nigeria, where they have 100 megahertz of 3500 spectrum, we don't have as much. But between the 2600 and 35, we'll make a plan. And then FTTH, FTTH, in our view, and we've been consistent, so we won't make it up, that FTTH, medium to long term, there must be some sort of consolidation opportunity that will come in one way or the other. We're not going to be allocating capital. We're going to have a fiber overbuild in this country before you know it. So, that's kind of our position. But FWA, And you saw, Charles and team have really pushed home as one of our highlights for the period. So we'll continue to invest in that way. Yeah, just to build on to Tsulu's comment, I did elaborate a little bit on how we think about the batting order for reduction of debt. As we assess where Nigeria comes out and this ability to repatriate, that whole batting order we'll have to review. And, where do we have share buybacks? Today, as we said at the bottom, I think in time when we look, we will look holistically at orders and when one would do back. We're not close to them, let's be clear to stakeholders, but for now it remains there because we're allocating capital to the top, principally the top three in terms of organic growth, debt reduction and dividend payments. We have the continuing discussions with the authorities around inflation. So I think what you need to take into is the process we go through. So we have discussed in Nigeria the need to be able to pass on inflation. We've got the 50%. The process of tariff increases in Nigeria is actually regulated and in the Act. So the Act has to change. The NCA Act has to change. But those dialogues are ongoing, and I guess when we make a development. In Ghana, we're already in a process multi-years. Because of our SMP regulation, we are defined as dominant in Ghana. And therefore, we can't push pricing down to enable the number 2 and number 3 to operate. And we've had sequential years of being able to pass on pricing quite effectively. There are no concerns really around Ghana. I guess the focus in Nigeria, Carl, Mudupe, and I am, they'll be focused on the engagements at an industry level to have much more formulaic tariff adjustment regime in Nigeria. The wholesale, as I said, it's predominantly South Sea. And I think the South Sea, the roaming revenue we're getting is pretty much what we expected. There's nothing there to see, and we're pretty happy with the work Charles and team have done to stabilize the South Sea relationship. There were times in the past we're talking about revenue recognition for South Sea. So South Sea, Telkom, I guess we're getting a decent share. We'd always want a little bit more on the rev share there. And, Capitec sit on top of South Sea. They're not directly with us. So that is an economic arrangement between South Sea and Capitec. We are kind of the wholesaler, so we don't see, all that's coming through there. But the traffic, total traffic that is going through to wholesale, Charles, remind me if it's about 25% of your total network? Yeah, and stayed pretty much the same, that 25% of the petabytes that we have in the markets are going to kind of on the wholesale. So it stayed pretty stable. We haven't seen anything that's shot out in terms of demands there. That's why you see the revenue profile also being pretty steady. We're not getting more petabytes for lower revenue there.